Hi, David. Good morning. Yes, I'm here with David Solomon, the CEO, of course, of Goldman Sachs. David, thanks for taking the time.
Thanks, Sarah. It's great to be here with you.
So it's a huge macro week. I think we have to start there. We're going to get inflation numbers. We're going to get a Fed decision. We're going to get an ECB decision, retail sales. Are you surprised at how resilient the U.S. economy has been holding up, given the inflation shock and the rate shock and the bank failures and everything else?
The U.S. economy has been incredibly resilient, and I would say that I have been surprised, over the course of last year. I certainly predicted, given the economic tightening we've seen, a bumpier ride than we've had so far. I still think we're at an uncertain moment. And I just said at the conference here, while our economists, again, reduced their view on the chance of a recession in the U.S., I just think it's a period to be a little bit cautious. I've got enormous respect for Jan Hatzius.
You've always sounded more bearish than he is.
But he's been more right, at this point. And so I think we look at it, I think we could muddle through here, with a much softer landing than we would have expected. But I think if you're running a big financial institution or you're running a business at the moment, we still could have an environment where we have slow, sluggish growth and inflation a little bit more sticky. So I think you've got to be a little bit cautious. That might not be a recession, but it certainly would feel like a recession if we had an environment with 0 to 1% growth and 3.5 to 4% inflation.
Last month, you were at our CNBC CEO Council, and we were on a panel together, and you were talking about how you do expect inflation to remain stickier and the Fed to keep hiking rates. Do you still feel like they have a lot more work to do?
Well, I'm not referring necessarily to this week, but I do think inflation is a little bit stickier. And I do think that in the distribution of outcomes, there's a reasonable chance that rates do go higher. I'm not saying they're definitely going to go there, Sarah, but I think you've got to be prepared for that. And, what we've learned, we always think about things through a lens of risk management and being prepared. I'm not a good predictor of where interest rates will go, but I do think given what's going on, the way we've tightened economic conditions, we still have stubborn inflation, there's really a chance that rates go higher. And if they do, that probably is going to make the economic environment a little bit more challenging.
So the recession comes when?
If we had a recession, I don't know, the end of this year, the first half of next year, but we might not. I mean, to the point, to Jan's view, there's a reasonable chance. The consumer's been more resilient. We still have relatively full employment. Hard to have a recession with 3.5% unemployment. And so we're watching the data like everybody else, and we'll just have to see. But so far, things have been navigated reasonably well after what was obviously a very disruptive period. We had significant disruption from the pandemic, significant disruption in terms of the magnitude of fiscal stimulus, and we're now, trying to rebalance that. Sure, there have been some speed bumps, but, I think so far the economy's been more resilient than we expected.
We got close to the debt ceiling. Now we're worried about all the issuance and the liquidity concerns there on top of QT. How do all these macro headwinds, primarily the volatility in rates, impact your business, investment banking and trading in particular?
Well, there's no question that there's, I think our clients are a little bit more risk off right now. And we've seen that over the course of the last few months. Certainly capital markets activity has been anemic for the last 12 months or so, but that's not unusual when you change the environment and valuation so quickly. We really went after a very, very robust period in 2020 and 2021. We reset valuations in 2022. We reset capital costs, and that obviously slowed down capital markets activity significantly. I always say it takes 4 to 6 quarters to reset. We're kind of 5 quarters in.
Are we seeing green shoots?
We're starting to see some green shoots, and I would expect capital markets activity to pick up as we head into 2024. At the end of the day, people need capital. They can defer some of those activities, but at the end of the day, they can't postpone them indefinitely.